Good evening to all traders and investors, and welcome to the Nightly Market Intelligence Report. It is August 7th, 2014. My name is Jeff Kilian. I am the Chief Market Strategist at the Inside Technician and the Administrator of the Live Trading Room. We have a very unique situation in front of us where we have not only called the market turning point ahead of time back here on July 26th and 27th, before things started to fall off, we have continued to call the momentum continuing to the downside all the way until where we have reached tonight at 16,361 and 46 on the Dow. Now, this is no coincidence because we know as the market turns back around from the way that the prices trade on the way up, there are levels that are laid out. This level was laid out over 5 days ago in lieu of the prices trading down and using this as a price profit target to the downside where prices would find support at 16.3, 61, and 46. At this time, we believe that the market still has considerable distance to go before this sell-off is over. Again, we believe at this time, 8/7/2014, there still is room for the sell-off to continue to the downside to probably even lower than 16.2, 66.23. Now, this is just one side of the equation. The Dow, the S&P 500 equities, and the S&P 500 mini futures ES near contract month 9/2014, our primary market that we trade. Analyzing all three to come up with a definitive analysis and an end conclusion as to what is the current state of the U.S. markets. Here we were net neutral. Here we went short level 6, and now we remain at our smart money bias market trading call specific to this smart money trading methodology at a short level 7. The indicators that we'll walk through here rather quickly tonight. And check in money flow continues to move to the downside. 1 trend violation, 2, 3, 4 here. And again, shortly enough, another one that will appear right here on tomorrow night's report that I want you to see the momentum to the downside first, and then tomorrow we'll fly in a trend line that has already been violated here. But look at the downward momentum again. Long-term money is continuing to leave the market, people. These are the wealthiest people in the world who can and do move prices from one level to another, as you can obviously see. Now, the money flow, the shorter-term money flow index, 14-period indicator, continues to move all the way down with an incredible velocity. So both money flow, smart money trackers, again, identifying with and clearly tracking the biggest pockets within the U.S. marketplace, paving the way for future directional price movement. The MACD is still very wide here at this time. The strength is strong as the identified change in trend came here. The disparity continues to widen to the downside. So as we look at all these clues, including the Chaikin oscillator, directly related to accumulation and distribution from the MACD indicator, that right now, this is not over to the downside, meaning there are still many opportunities. Now, in the live trading room, trading ES near contract month, we have recorded some incredible trades that we have made, some very highly profitable trades. And it's not just from our end that these profits have been picked up. They have been brought in from the subscribers who are in the room as we make those trades. Now, this is one of the greatest benefits of this service. This nightly market intelligence report included as a package deal within the live trading room subscriptions to allow a trader an entirely higher level of very comprehensive analysis to be able to trade as a professional. Let's get out of the Dow and take a larger look at the overall U.S. market, getting into the equities for the other half of the entire equities equation. Here, after we get out of the channel to the downside based on these dominant prices here, not just the blow off to the downside here on the close. Here is where prices gap down, signaling increased weakness right down all the way, just about a few points away from the level that we had laid out here at 19, 28, and 53. That's no coincidence because this was used as an end goal target as well. So now we have two different equities markets, similar but not the same, showing you the same thing. And where's the next target to the downside here? Not far away from the Dow, 1897 and 13. The indicators on this market here are similar in nature on their configurations relative to the prices. Chicken money flow, once again, trend line violations firing down, and again here, here, and here, and tomorrow we expect that this will have even more momentum to the downside, indicating that this configuration representing the smart money and where they are relative to the prices, well, the prices have some distance to go to catch up now, don't they? Yes, they do. Short-term money, different than the Dow, right? Markedly different configuration. 1, 2, 3 trend line violations, down, down. Short-term correction to the upside. And just 2 days ago on the nightly market intelligence report, we called that the prices should continue to trade to the downside, and they did. And once again, we're calling for the prices to continue to the downside one more time. And more than likely, they will. This is one of the strongest short-term sell-offs so far that I have witnessed in a long time. The amount of futures volume that came in for the sell-off really helped out after the equities came in with some accumulated volume spikes. Now again, here the MACD disparity is very wide, and it's clear that that cross came way back here much earlier than the Dow and never really looked back. Very strong downtrend in play still out of this. Here's the accumulated volume that came in as well as the equities. Here's an additional volume spike. Focusing in on this point, prices after the probe to the downside on the down close traded back up on inflated highs and could no longer withstand the amount of selling pressure, especially as generated by this particular bar right here, to be able to stop what was an eventuality. Gap down once again proves weakness, and here we are to the downside. Let's get into the primary market that we're trading here, the S&P 500 mini futures in real time every day within a live trading room. And let's look at the end of day analysis on this side of the equation. Futures usually leading. In this case, the overnight session is now open. And here we are, September 2014 year contract month. Prices down marginally, marked to the market right now in real time. Looking at an end of day chart updated in real time, 1905 and 50. That's 1905 and 50. The two enormous volume spikes that came in here started everything off, especially the initial here, right back on 7/31 after we called on the report. Once again, that's posted on YouTube, and the time and date stamp can't be denied, that the market would fall. And again, still distance to go to get down to the 1888 flat level as generated by these prices, broadcasted out into the future. Very little resistance to the downside as these bars are so well interlocked, people. Below that, we'll have a new level for the next report here on next Sunday night's edition, and we still have increased volume here and here above the 21 period average daily volume. On the indicators themselves, getting right into the short-term money flow in this case. Out of the pattern, trend line violation, and again, strong downward momentum, short-term correction, and right back down with no end in sight at a value of 23.08. A lot of room to go yet, people. And once again, let's take a look at the shaken money flow. Look at how far oversold this indicator is and still has some distance to go. What an incredible showing of just how short the larger participants are within the U.S. marketplace. This is the next target to the downside. And the key behind the stair-step down on the analysis is that we know very well, people, when prices get through a trading channel, in this case established by these prices, that this is essentially where the real-time trades are really going to take off for us. And we have made several trades to the downside until we have an end-of-day target here. Several trades to the downside on many different days, full well knowing that the overall market bias has changed to the short side in a big way. And if we're really looking for profitable trades to be had, if we're really looking to put real green in our accounts, we need to load up in these type of market environments and trade more contracts short, because this is where we make the lion's share of the money. This is Jeff Kilian, the Chief Market Strategist for the Inside Technician. Our highly profitable live trading room offers a free, unlimited access pass for a short period of time to see for yourself just how profitable we really are. Go and visit theinsidetechnician.com. That is theinsidetechnician.com. See the blog. See the recorded trades that provide the entire world with the undisputable truth and proof of how we do what we do in real time. There is no other trading room in the world like this one. The consistency, the profitability, the management of the risk on every single trade is fully calculated ahead of time, giving us the best of the best, and once again only selecting the true high probability trades. The next profitable trade is counting down. Will you be there?